Hello and welcome to another daily forecast by Forex alignment analysis. Today we're going to be looking at gold. Today's the 24th of October, Monday, and Friday we had some interesting developments on gold, which we're going to have a look at on the hourly chart. But let's just take a look at the daily chart for the moment, and we will, as always, find out where we are with the wave count using Elliot Wave theory. So here on the longer time frames, you can see that we are currently in a wave 3 and maybe just ending a wave 3. We need to see. That was the interesting development on Friday. We'll have a closer look at that. So I've also put in the subwaves here. So for this wave 1, we have our 1, 2, 3, 4, 5 waves down, and then an ABC up for the wave 2, and then for the wave 3, 1, 2, 3, 4, 5. Now, what we don't know is the wave 3 finished? And are we now starting a wave 4? Well, let's have a look at the 4-hour time frame, and let's have a look at it a little bit more closely. So where we can see these subwaves here. So this is the end of that wave 4. This would be the wave 5. So in that wave 5, we're looking for 5 subwaves, which we have 1, 2, 3, 4, 5, and then we have this big impulsive move up, which happened on Friday. Kind of at the end of the day on Friday, it just pushed all the way back up and kind of broke the structure here. It just kind of pushed past it this morning and then back down again. So I wouldn't say that that's a confirmation of a break of structure, because the market kind of opened at 1670 and then pushed straight back down. So I'm not sure if we've broken structure yet. We need to wait and see. And as you can see, we're now pushing back down. So is this wave 5 complete? Is it going to carry on? Is this going to be extended? Well, last week, so I've put in this 1620 area here, which is quite a strong level of resistance, of support, sorry, which we had earlier on, and now we've had it here. We went down to the 1620 level, and then we have impulsively moved back up, as you can see. And then this 1670 level here has proven to be a strong area of resistance. We can see over time it's acted as a level of resistance, and we've hit up into this level and then pushed back down again. So we've had that impulsive move up, and now we're having an impulsive move down. So I've put some levels on here, and as you can see, I've written in here, this is my sort of strategy. It's a no trade zone between this area of support here, which we can see has acted as support in the past, and we're kind of bouncing around that level right now, just pushed through it and then bounced back up. And below this level, I would say that we're going to start we're going to continue being bearish on the way down. And then above this level here, which is the 1660 level, we're going to start to see a push back up being bullish. So the question still remains, has this wave 5 finished? Are we at the end of a wave 3? And are we going to start now pushing up and making a wave 4 on the longer time frames, right? We could potentially have a 1, a 2, and then we could start to push up for a wave 3 and then break this structure here, right? That's what could happen. So, or we could just continue back down, because this isn't really a confirmed break of structure here. It could just be a correction, and then we carry on moving back down for a continuation of the wave 3. So what can we do to try and check this? Well, let's take our Fibonacci retracement, put it on here, and let's assume that we did break structure. Okay, and here we go. We've just come down, we've touched on the 50% Fibonacci level, which is also matching up with this 20-day moving average. So this is what alignment analysis is. This is my strategy. Is I look at Elliot Wave, and then I look at the Fibonacci ratios, and I look at other technical indicators, and when they all align up, then that gives me the best chance for looking at a potential trade, right? Now, I'm still not going to take any trade based on this, not yet, because as you can see, I've decided this is a no trade zone. I'm only going to go bearish if we break out of this level here and we have an impulsive move down below the 1646 level, which is just below this, or just above this 50% Fibonacci. If we have an impulsive move down, we move past this moving average, then that for me will confirm that we're going to at least move down to the 1620 level. Or we could start what I think would be a wave 3. If we do bounce off of this 50% Fibonacci level, we could start maybe a wave 3 of the wave 4 on the longer time frames, and then we move up, and I still wouldn't take a trade until we go past this 1660 level, and then for me that would confirm that we have broken the structure and we're going to start moving up, making that wave 3. So I would need to still see an impulsive move either down or up to confirm anything. So let's just take a look at this on the 1 hour time frame just to see where we are. I'm going to just take off these here so it's a little bit clearer, and we're just going to zoom in. Okay, here we are. So we've got another 8 minutes left on this candle. Let's see what happens after. So like I said, we're looking for either an impulsive move down to confirm that we're going to remain bearish, or an impulsive move up to confirm that we are going bullish. Be very, very cautious with this. It could move in any direction. What I would recommend is, confirm it first before you take the trade. Don't guess. Get it clear in your mind which direction you really do believe that this is moving in. Take away the guesswork. Even if you do have to wait until you move up past one of these higher levels or one of the lower levels and you feel like you're going to miss out on all of this here, you start seeing an impulsive move up, you want to take it, because you don't want to miss out on all of these pips here that you can get. But if you take the trade and then it reverses and you've got an impulsive move down, then you're going to be waiting around for a pullback to try and minimize the loss, and you don't want to be doing that. That's a dangerous game to play. So it's much better waiting for it to pass that level. It's better to wait for a pullback to take a trade than wait for a pullback to get out of a trade and know that you're going to lose money, right? So minimize your risk, see where it's going to go. But I do believe that by the end of the day, we're going to have a clear direction, and gold could be a very interesting trade to take over the next day or so. Okay, so thank you for watching. Please make sure to like and subscribe, and I will see you in the next video.